You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phone. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas.
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Friday, 20th day of March, 2020. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. I just got a pop-up that I may be experiencing network difficulties, so maybe somebody could give me a sign, not a wonder, just a sign in the chat box, if you can hear me. An X, a Y, a Z, a check mark, a hash mark, just anything in the chat box that would let me know that you can hear me right here, right now. Anybody?
Okay, Bill.
All right,
Bill
I got an
can,
X. Bill, okay, all right, I see the X. All right, thanks, Val. Okay, well, guys, here we are. What an incredible week this has been. Let's open in prayer. We've been doing that the last couple of days, and I think, well, we're not through this yet. Father, I thank you for the privilege, for the birth lottery of growing up in this country. And although many of our standards are being eroded, I thank you that for so long we've enjoyed the liberty and the blessings that we have received from your hand in this land. Thank you for my country that I live in, God. I did nothing to deserve to be born in America, but in your grand plan, that's what you chose, not I. And I'm thankful for that. Lord, I pray that you would keep your hand on our country. I pray, God, that you would give our leaders the wisdom to see your way and to look to you for the direction that we as a nation need. But also, God, help me to hold the things of this world lightly, knowing that my true citizenship is in heaven, that I am a part of your heavenly kingdom. God, I pray today that, and we all pray together as a group, we come before you. We pray for all those that are in need. God, I pray that you would feed the hungry, comfort those in sorrow, heal those that are sick. And God, I pray that this attack of the enemy, that it would be used to bring those who do not know you as their Savior. I pray that this situation would bring those people into a close and personal walk with you. And we pray this all in Jesus' name. Amen. Amen. Okay. All right, guys. Happy Friday. Let's take a look at a chart real quick. The S&P 500 Emini Futures. While I'm going to go to the daily chart, but while I'm on this chart, I'll show you, those that were in the workshop last night, this will make perfect sense to you. And those of you who were not in the workshop, I think you might want to have a look at last night's workshop video. We didn't really cover new ground. Maybe we just covered it, explained it perhaps in a different way. So we had an alert this morning, just a bit ago, on the S&P to be short 2369 with an initial target at 2367. Next target 2365 is right here. Okay. And then of course we have the weekly trading zone below us, but it's significantly below us down at 2268/69. That's, roughly 100 points below us. So that was the alert. This is the corresponding window of opportunity. Okay. And again, the idea was to be short 2369, which is right there. And then again, the first target was 67, that's 2 points. And then 2365, that makes it 4 points. And we exceeded that second target at 2365. We have a swing low in place right now of 2355. So that was initially a 4-point trade, but if you chose to trail your stop, there was an additional 10 points to be had before returning to the top of the window. Okay, we're at the top of the window right now. Important prices, important areas are almost always tested. So am I saying that there is a high probability that price will now repeat what it just did? that it will once again go from 2369 to 2367 to 2365? Yes, that is a high probability. Okay, so we'll keep an eye on it. We'll see how it goes. But for those of you that have already taken advantage of it, and maybe that gave you your points for the day and then some, well, that bell's for you. Okay. Now, I actually highlighted two windows of opportunity on that chart. One would have taken us back to the BBC, never triggered. Okay. But and that would have been counter trend. Can't stress that enough. At this point, now we always expect price to pull back to the BBC, right? Price always reverts to the mean, and in our case, the mean is BBC. Just means bull bear cross. When price crosses above it, no matter what time frame we're looking at or what market, we begin to anticipate higher prices. And when price gets below it, doesn't matter what market or time frame, we anticipate lower prices until when? Until price gets back above it. So bull bear cross. All right. So in keeping with the trend, not the counter trend, but the trend, and that was the one that, remember, I often mention, especially here of late, the counter trend opportunities in the discussion group. So if you're not taking advantage of the discussion group, whether you're on the trial or whether you're, an actual member, a lot of information gets disseminated there, a lot of teaching. So, I encourage you to not only read it, but participate. It's a great place to ask questions. And many of our traders now can answer your question just as good as I can. Okay? Because that's the whole goal of what we do. Michael and I do our very best to teach you what we know about trading Emini Futures. What we teach you did not come from a textbook. It came from trading in the markets. It begins with learning how markets work, which is a step that most methodologies, most strategies, most things you buy off the internet, they don't even go into that. Okay? Without a fundamental understanding of how markets work, how will you ever learn to read a chart, much less learn how to trade? So first, you learn how markets work. And most people think, well, I know how markets work. Okay. Maybe I should say our definition of how markets work. Okay. Once you understand that, then you can learn to read a chart the same way we do. And then you're ready to learn how to trade. Okay. All right. So I said we would go to, now we're still dancing around at the top of the window. And again, a high probability is that price will pass down through this window again. Okay. We've got red and falling overhead. We're below the BBC. The slingshot, red and falling, just crossed the 50-yard line. We already know that red and falling creates a bearish condition. But when we cross that 50-yard line, that's often when it kind of kicks in gear, if you will. Okay. All right. So daily, here we go. So much stuff on this chart. I'm just going to make it all disappear. There you go. So this is the S&P 500 Emini Futures. I'm using the continuous chart. So let's just see what the difference is right now between the pricing that we get on the continuous chart and the pricing that we get for the actual contract, the current contract we're trading, which is June, the letter M. Okay. What you'll find is that as a contract matures, right, we have rollover, we start trading the June contract. Okay, the closer we get to rolling over again, the narrower the gap between the continuous pricing and the actual contract. So you can't trade this you can't trade this. This is the index. Actually, this is futures, but you can't trade this symbol, right, at S. You've got to trade the current front month, they call it, which is ESM. So price right now, what do we got? 23.64.
60,
62?
yeah, 63 and a quarter, 64. It's bouncing
Okay.
around right in that
Yeah,
range.
all right. So let's just pop over to the ESM. ESM. And how much are we off? I can't tell. Let me do this. Let me do a 1 minute chart. It should make it very simple. Hot, I don't know, 23.66. So at ES. Looks like they're pretty close right now. Kind of neck and neck. So not a big difference. All right, so let's just go back. The purpose of using the continuous contract is so that you can bring in more data. Because if you look at the June contract, which we'll do in just a second, and that's all you see is just June. But the continuous allows you to see back, months, years. Right. So price came down just now. Oh, you know what? Let me stay on track here. Go back to the daily. All right. Here's where this is a very important area here where the bearish cross took place. Let's just look at the reverse fibs real quick, and then we'll go to Michael and get a recap of what happened in the live trading room. Okay. All right. So, if we rally up out of here, 24% reverse fib. This 38% reverse fib is interesting in that if price rallied from here, or meanders, or however it does, there's a chance for price and the BBC on the daily to meet up around that 38% area. So that's called confluence, congruence. You can give it all kinds of names. Now, if I go from that low to where the BBC is right now, well, you can see how it lines up. This swing low lines up with the 50. These swing highs are a little bit above the 62. So that's the big picture. Have we found the turn? Now, in the Telegram channel the other night, based on a different time frame, and I think I went over this yesterday, I posted a chart that showed 2360, and I said, is this possibly it? Could this be the turn? And I don't know. I mean, looks like we might want to go back and test it. So let me just give you the numbers from around the world real quick so Michael can bring us the recap. Let me just refresh, get some fresh data. All right. In the U.S., currently the Dow down 197 points, 1%. NASDAQ down 56. S&P 500 down 35. That's 1.5%. In the Russell 2000, it's down less than a point. In the commodity basket, crude oil down $2.41, trading 22.81 last. That's a drop of almost 10%. Gold up $9.50, trading 14.88.80 last. The Asian markets at the close, the Nikkei dropped 173 points, 1%. Shanghai gained 43, and for the Shanghai, that's a gain of over 1.5%. And the Hang Seng, this is impressive. The Hang Seng added 1,095 points on the session, which is a gain of 5%. In European markets at the close, FTSE gained 59, 1%. DAX gained 331, that's almost 4%. The CAC added 206, and for the CAC, that's a gain of over 5%. That gives us mixed day in Asia, green day in the UK, and so far it's a Big Red Radio Friday here in the US of A. I'll go into detail on the Concierge Trade Alerts and the Logic Alerts when I come back. But for now, let's go to Michael and get a recap. Michael, if you are ready.
I am ready. I am ready. Okay. Let's see. We're gonna go here. There. You should be looking at my screens.
We are looking at your screens. Locked and loaded.
Excellent.
All yours.
Okay, I got it. Good afternoon, everyone. Today is Friday, the 20th day of March, 2020. Well, I was just in here looking at the orders that I actually did, and because there was one that I couldn't remember where I placed it, and one big one. But let me get into the spreadsheet first. Okay, let me start with that. And here we go. All right. Well, if you have not taken a free trial with us and you want to take a free trial with us, go to the homepage at CFRN.net. Over here in the right-hand column, it says apply.cfrn.net. You can click on that, or you can go down here to any of these free 5-day trial things and click on them. They will bring you to this page where it says trading's not easy, but it can be simple. And all we ask for is your name, your email, your phone number. And you tell us the biggest trading challenge so we can tailor one-on-one training just for you. Hit the send button and you'll be sent a confirmation link. Once you get that confirmation link, you must click on it. All right. We don't know you took the free trial until you do that. All right. Now the spreadsheet, if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. And as I said, today is the 20th day of March. We made 8 ticks in the euro, 1 tick in crude, and 58 ticks on the ES. Put us at plus $785 per contract for for 2 hours this morning. And there was a ton more money to be made. You know, I could have made more than yesterday and more than last Thursday. But alas, I was training. Okay, today I took 8 minutes in one trade to get to the goal for the day. At that point, we're up $300 a contract. We took a total of 7 trades. So on the month now, we're up $9,810. That's over 15 days, averaging $654 per contract per 2-hour day. On the year, we're up $16,762. That's over 51 days, averaging $328 per contract per 2-hour day. Okay. Now, I'm not going to go through everything. We didn't trade anything on gold today because gold's got a spread. So I was just leaving gold alone. There were a ton of trade setups. If you didn't mind taking the initial loss, because, you know, when there's a spread, you enter with a loss, you know, and so you're paying a commission and getting a spread. But, you know, as I've been saying, you know, when the markets are crazy like they have been, you know, I tried to move away from the 4-tick range, but I just can't do it. So I'm just dealing with it, and you know, you got to look at the slingshot. The slingshot's going to tell the story. It's going to be fast. It's going to give you a little bit of heads up, and then you got to look at price, and then you got to hit your down. Okay, so I mean, there were trades here, 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 here. You know, there's just. And that was during the break. I mean, there are just so many opportunities. But you got to be quick. You got to be able to do it. You know, and I don't have time to draw the trend lines, explain the trade, and do everything all at once. You know, like I normally do right now because the markets are nuts. So I try to tell people, you know, if you get enough close on the curve bar, it's going to be a long trade. And you should pick one market and trade one market. You know, today I had the Canadian dollar up again, and I was using that as an example because, you know, it wasn't bouncing around crazy like everything else was. But I mean, like right here, see the black step line is about to cross below. You would draw a trend line right there, and up close on this bar would be a long opportunity. But see, it just got disqualified. Right over here was nice long, and the slingshot's telling the story. When that cycle's going down against you like that, you don't want to go long. As a matter of fact, you start thinking short and wait and see what happens. Okay, see down close on this bar right now. I'd go short on that. And there it is. Now we'll see what happens with that. And let me just highlight the area. It was right here. Let's see. Stop would have gone to break even already. If you'd have gotten into it, you'd be out at break even. If you follow the rules. Okay, on the euro, we only had one trade today on the euro. And let me go back and see if I can find out where it was. And there were a ton of trades to be made on the euro. Okay, but I was really trying to do a lot of training today as opposed to trading. But there were a ton of trades to be made here on the euro today. Come on. My computer just locked up. Okay, there it goes. Here was the one trade that we did do. There was another one right here that was way better than this one, but we picked up 8 ticks on this, and I was happy with that. We had a short trade here, there, there. There. In long trades, there. So you can see there was just a ton of opportunity today, and that was all in the first hour, and they were all winning trades. But I was trying to do a lot of training. Okay. Now crude oil, we only had one trade on crude, which is really odd, but there were a ton of trades. There were a ton of trade opportunities, but again, I've had a pretty good week. So I was doing, training versus trading and answering questions, and there were a lot of questions today, and we encourage that. The long trade. We encourage the questions. I don't know where the one trade is, but I only got 1 tick on it. I did highlight it, or out, put the arrows on it, I thought. I don't know where it is. Anyway, that was crude oil today. I mean, if I were to show you every single trade setup that happened, I'd be here till like 4 o'clock. I stuck to the 4-tick range today. I looked at a minute chart because Brian was asking about risk management on a minute chart. So I looked at it, but I didn't do anything with it. All right. So let's go through this. Okay, no, you didn't, not yet. Trump suspends income tax until July 15th. Good afternoon, James. It was right in here somewhere. And I know I wrote it in. There it is. All right, that was my first trade right there on the ES, and I picked up 24 ticks on it. My second trade, that's what I came to look in my account for, was at 10 o'clock. And it was a sell from 23.94 and a quarter down to 23.87 and a half. So that was my next trade. Man, I didn't highlight it because it was jumping around too fast and I was trying to keep up with everything. These mornings are just exhausting for me when it's like this, because I'm still doing all 4 markets, and I'm trying to tell you what's going on each market as it's happening. I didn't. Okay, here was one. I think this was a break even. Yeah, 23.87.5 to 23.87.5, something like that. No, 23.85.5 to 23.85.5. That's what it was. I could have taken some profit in it, but I didn't. And the next one was at 10 o'clock. It was at right at 10 o'clock. So I think we jumped into this. It was a long trade, and we jumped into this and picked up somewhere there was a 4-tick trade, and then this was a 27-tick trade, I think. I don't know. It put us at plus 57. And then I took one more trade on the ES, and it put us at plus 58. See, plus 58 ticks. And that was the morning. Now, these mornings have been crazy. So anybody that's in here that's on the trial, it's not usually like this. I mean, if you've been on the trial, the last 2 weeks have been like this. But that's because this virus has got everybody crazy. And it's scared money, and liquidity is low. Before you could place a 100 contract order on the ES and get it filled all at one place. Right now, if you placed a 100 contract on the ES, you might get spread over 10 ticks, 20 ticks. So just stuff to think about. All right. So let's go back here. Was Trump speaking, James, earlier when the ES was tanking? I was doing other stuff, and I didn't have the TV on. Oh, okay. All right. So, as I said, if you're going to read the spreadsheet, you've got to read all the CFTC risk disclosures down at the bottom. Today's the 20th day of March, 2020. Made 8 ticks in the euro, 1 tick in crude, and 58 ticks on the ES. Put us at plus 785 on the morning session. Today, it took 8 minutes and 1 trade to get to the goal for the day. At that point, we were up $300 a contract, and we took a total of 7 trades. So on the month now, we're at $9,810. That's over 15 days, averaging $654 per day. On the year, we're at $16,762. That's over 51 days, averaging $328 per day. Now, I don't know when I've averaged that on a daily basis before. And the month's not, we still got, 1, 2, 3, 4, 5, 6, 7 more days in the month. And at $654 a day, that's going to be a chunk of change. And anyway, if you have not taken the free trial, you can go directly here to eminitrainingschool.com, or you can go here to the homepage at CFRN.net. Just click on the free 5-day trial, and that will bring you to eminitrainingschool.com. And on this page, all we ask for is your name, your email, your phone number. You can tell us the biggest trading challenge so we can tailor one-on-one training just for you, and hit the send button. Once you hit that send button, you'll be sent a confirmation link. You must click on the confirmation link. Okay? We don't know you did that until you hit the confirmation link. All right. All right. And with that, I can pass it back out to fabulous Phoenix, Arizona, overlooking South Mountain, America's largest city park. Dwayne, if you are ready now. I think John's out there too.
I am ready.
And I gotta go make a couple phone calls.
Alrighty.
Send a whole bunch of emails. But here, let me open up John.
All right.
Do you want me to open up John right now?
Yeah, that'd be fine. What was the recap?
Okay. Today it took 8 minutes and 1 trade to get $300 a contract.
That's good bingo.
Yes. Once again.
Okay. John, I'm sorry, go ahead. No, go ahead.
Go ahead, no.
I was going to tell him he's got an open mic if he's ready. But you go ahead.
Yeah, well, you can usually hear him when he's got an open mic.
Yeah.
But if you if you look at the spreadsheet, I've gotten the goal on the first trade 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 out of 15 days, I've gotten the goal on the first trade. So, this is really an unusual month.
It is.
But it's great.
Yeah, it's
great.
the
money is there.
Money is there. What it comes down to, guys, is almost every move, every significant identifiable move has follow through. At least enough follow through to be able to get your, goal for the day. Last night we were talking about in the workshop about the current size of candles and the average true range and all of that. And I made a comment that this opportunity here, which whatever it was, we were looking at one of the alerts, was a 30-point move, 30-point trade. I said, once we go back to normal, whatever the new normal is that surfaces from all of this, that 30-point trade would probably be more like a 3-point trade. But that's okay, because that's still enough to give you your goal for the day, if you have a 2-point goal. Because our belief always has been, always will be, Michael and I believe that the way to solve the market equation is not by trying to knock it out of the park, not by trying to find the 5 and the 10 and the 20-point trades. There's nothing wrong with those. But the market doesn't always give you those kind of moves. So what the market does give you, in fact, the market has provided, since I began trading futures in 2005, every single trading day that I was at my desk and at my platform, the market has provided an opportunity to take 2 points out of the market. That's something I know that I can rely on, something I can depend on. So, based on that, once I am assured that I truly have a definable edge, which we've got all the evidence in the world that what we do does provide a definable edge, then what I want to do is take any profits that I earn and use them to add another contract. And as I generate profits with, now let's say you're going from 1 to 2, so the profits you generate with 2 contracts, use those profits to add the 3rd contract. That's the smart way to build your trading business. Okay? Just because you have enough money in your account doesn't mean you should be trading 10 contracts. In fact, that's a surefire way to make sure that you don't have enough money in your account to trade anything. With us, you start in Sim. We want you to have 10 consecutive days in a row where you reach your goal in 10 trades or less. And then our 24/20 blueprint gives you the green light to go live with just 1 contract. Then we want you to increase your account balance by $2,000. Once you do that, you get the green light to add a 2nd contract. Then it goes on a time-based, calendar-based method where you'll always know, just looking at the blueprint, that if things continue to go well, you'll know when you're supposed to add your 3rd and your 4th, and then you have the freedom to build your trading size as large as you want. And you should never feel, just because you hear some guy over here is trading 10 contracts or whatever it might be, you should never let that pressure you into trading anything more than what you've earned the right to trade. Now, you may have earned the right to trade 20 contracts, but maybe you just feel real comfortable trading 5. Don't feel under pressure. It's okay to trade 5 or 3 or 7. Water seeks its own level. What you have to do is you have to learn to put yourself in the state of mind where when you sit in front of your demo platform and trade, or you sit in front of your platform and trade whatever it is you've earned the right to trade, your feelings, your emotions, it's just no different. Doesn't matter to you if it's demo or if it's live or if it's one contract or if it's 10, because you're going to do the exact same thing under any given set of conditions. And whatever the results are, you understand that doesn't define who you are as a trader, doesn't define your methodology, it defines, it's just another trade. There he is. All right, John, welcome to the show.
Hi, sorry I could come on sooner.
No worries.
Anyway, we just got knocked down a bit
Yeah.
on this news of the border situation.
Yeah, I just saw that headline pop up here. Let me share it with the audience. No, that's not the one. I thought I had it right in front of me. Go ahead, tell us what they're doing with the border, John.
Basically, their non-essential travel is closed, both Canada and Mexico, and
Okay.
they're definitely going to, I guess, be very vigilant about illegal crossings, and there's not going to be no illegals are going to be housed in the U.S. They're going to be repatriated immediately, both sides.
Yeah, okay, here we go. Restricting non-essential travel between U.S. and Mexico, waiving school standardized test requirements, suspending student loans, and enacting the Defense Production Act. So, okay, so, I mean, that's a big deal. So what do they consider non-essential travel? A truckload of produce, is that essential or non-essential? I mean, I don't know.
Medical, possibly food, or might be some people cross the border for food.
Mm-hmm.
I guess any kind of commercial is okay.
Okay.
That's gonna stay. So I wouldn't call it like maybe they'll ask you questions or something like that if you're trying to cross. But anyway, what I wanted to say is, the market went limit up last night and it was unable to stay limit up. That is never a good sign when that happens. The fact that we came off the limit and we're now negative is not unexpected. And I'm not ruling out a late rally today. I think there could be something if there's a bit of intervention or something else. If we do get a late rally, it's probably going to save this market from breaking down all the good upside that we've put in this week. What's interesting is as we looked at public enemy number one yesterday, which is the VIXs, it's obviously not public enemy number one if you own them, as long as you sold them in the last couple of days near the highs, because they've had a pretty devastating pullback. I mean, we've gone from like 130 on the UVs, and we're currently 85. We come down into the 80s. That's a staggering pullback. And the market is kind of you could argue that we've put in a three-wave pullback, and we've actually come back to the level of which we started out last night. And there is, the daytime traders don't like to miss out on the opportunity that the night traders were presented with, which is basically on the Nasdaq was around 71.40 or so was the low, and then we had a blistering rally, or a kind of an accelerating rally. It's kind of a momentum increasing rally. What was tough to handle, actually, in terms of analyzing these markets yesterday, was we sold off before the close, if you remember, and so the top gains of the day were somewhat clipped, not to any large extent, but the indices did come down, until about 6:30. So I forget, it was sometime, maybe about an hour after maybe 7:30 last night, and they kind of turned. Now, what was troubling was they were kind of going parabolic to the downside,
Right.
and then we kind of went parabolic to the upside. So it was a tough switch, if you like, from bearish to bullish, because normally when you're going parabolic to the downside, you kind of think it's going to go a lot lower, but it didn't. And so then it went up the limit. But then it came back. So now we've put in this test, almost a perfect double bottom. We're actually developing a possible buy signal here, it's already in place, potentially. And, you've got to be careful. There's an old rule on Wall Street. The market doesn't always react the same way to the same news. In other words, the news of shutting down the airlines and Europe, was a devastating blow to the market. However, today, we've pulled back, but we're close to getting positive again. Actually, positive on the Russell already, and on the semiconductors. That's encouraging.
Now on the S&P, John, we got resistance for us based on our strategy. If we can continue to move higher, resistance around 2408. That's the number we're looking at.
I would agree with that.
Russell.
I would agree with that.
Here's the Russell.
Yeah.
That's on a 30-minute
So
chart.
look, the Russell's almost taken back that down candle. That's quite a positive thing.
Yeah, no, it is.
Yeah, and by the way, look, while you've got that chart up there, look at the way the market has been going up. It's kind of going up in a bullish kind of a flow, where it pulls back and then advances, pulls back and then advances, and you could argue the same thing is unfolding here right now. And look, you could say maybe we'll spend another day or two going sideways here, sort of head and shoulders bottom. But if this gets negated to the downside, forget about it. I mean, it's really there's gonna be a serious new down leg. I believe that that will probably be the bottom. That's sort of very much in line with a kind of a 29 model, and then there's so that's the equivalent of going down to about maybe 2100 on the S&P, possibly 1950 or a bit more, and then having a big rally up to 2600. That's kind of the 1929 model. So even the worst of 29 had a big rally after the lows were put in. And right now, when you look at that chart,
This is the
you have to say,
cash index here, S&P monthly.
yeah, when you look at that chart, you have to say to yourself, do you really believe this thing's gonna reverse like magic? When you got such a devastating kind of a
This
structure.
this chloroquine, John, seems so promising, but I don't. It's almost as if the media doesn't want to let go of the pandemic atmosphere. Maybe they're just all being maybe they've all agreed to be cautiously optimistic.
There's actually three components to the chloroquine thing.
Okay.
The zinc, you need to take it with zinc apparently.
I read
You need to
something
check
about
it.
just putting zinc lozenges in your mouth.
Yeah.
Okay.
Don't go off what I'm telling you to do. You can check check with your doctor or whatever. But zinc, and then there's this Z-Pack, which is is some kind of an antibiotic.
Zithromycin, maybe
That's the one. That's the one. Yeah. So that combo basically eliminated the symptoms in 3 days and the virus in 6 days. And I, listen, I'm kind of stunned that they're not already kind of distributing that.
Well, exactly.
Almost,
exactly.
So I also said that I'm taking a combo of a few things, and I was getting a bit worried last night because I had a bit of a throat developing, and woke up this morning and it was virtually gone. So I'm quite pleased about that.
Amen.
I've still got a bit of a raspy voice, but
My
anyway.
wife said that she heard this morning that the mortality rate for men, I don't know how they're just now discovering this, but the mortality rate for men is twice as high as women. Have you heard that?
Yeah, there's blood types being, things like
Type
that.
A,
They say the blood A, which I happen to be A plus, is a problem.
I have no idea what my blood type is, and I should know that,
should.
having been in the military, but I don't.
So, anyway, we've just gone positive on the Nasdaq. So I think that actually we have a kind of a three-wave pullback this morning since the limit up. That's actually kind of constructive. So it's definitely possible that we may actually build on this rally and not have an Armageddon type development just yet.
Yeah. Here's the NQ on a monthly, the continuous contractor.
Yeah.
The NQ.
Can you put the weekly up, see how that looks?
You bet. Okay. There's weekly.
Yeah. And I think that, if we get up, just widen that out a bit for a minute again.
Like this?
Yeah, if we were to rally strongly this afternoon, you could argue that the lows might be in based on the weekly. It might be enough. Look at the daily now, and I think you'll see that it's potentially even more constructive.
I've listened a couple times, just because they keep playing the sound clips. This talk that Bill Ackman had on CNBC the other day, I'm sure you probably listened to it, right?
Yeah.
That hell's coming, and
it reminded me of? It reminded me of Elaine Gazzarelli and the other person who sort of like panicked on March the 6th, 2009, and said the Dow was going from like 6,500 down to 4,000. It's sort of that's kind of whatever. And look,
I think it was very irresponsible of him. I just think it was very irresponsible for him to use that kind of, people still believe him after Herbalife. So anyway, I'm sorry.
I think it was incredibly uncalled for. And this other guy, Herzvik was on this morning from
I
Shark
caught a
Tank.
tiny bit of that, yeah.
Yeah, and he's saying the same thing, like hell. He said he referenced this guy and said hell is already here. Well, we know that, but and I think actually, it's kind of crazy because Trump's doing everything in his power to sort of mitigate this problem. And
right.
I personally, I think that they need a $5 trillion bailout, and I think the market go limit up for days if that happened. But then Mnuchin comes out and says, 20% unemployment. I mean, what the heck? It's crazy. I think it's kind of like this business on the impeachment. When Mulvaney says, quid pro quos, we do them every day, kind of thing.
It's how the world works. It's
yeah. So, sure, it's very frustrating when guys open their mouths and sort of just get their foot in their mouth. It's crazy. They should be very careful what they say. Anyhow. So, and you know what? Look, that, can you put up the UV or the TVIX? See how that looks today.
Okay, tell me again which one.
Sorry, TVIX.
TVIX. Okay.
I mean, look at that correction there. Now,
that is, yeah, go ahead.
Yeah, the problem, what I was going to say yesterday is, there's always a kind of a divergence when there's a real sort of turning point in the market. I think the UVs got a little bit higher on the
There's the UV.
No, I'm wrong. So the other one was kind of a double top, and the UV didn't quite get there. Now look at the SQQQ.
Okay.
So look, you see, the SQQQ made a high a week ago or more, right?
Right.
And yet it was unable to go to new highs, and it's in a totally different kind of.
I mean, and look at the attempts it made. Like this candle here. I mean, this was a big green candle at one point during the day, and look at that reversal. So then it tries again, it gets knocked down. Tries again, it gets knocked down. I mean, it's price is definitely being rejected.
What's the bigger? You see the tech stuff has gone up so much that this today that. If you go back, look at this green candle. look at the last time we had a candle like that, and look what happened next, right?
Are you talking about this one, John?
Go back a week. Just no, yeah. Just go see that previous green candle.
Right here.
This one. Yeah. See what happened? Bang. So, I think that was the day that Trump announced the border closures. So
That was March 20. I'm sorry, March 11th.
Yeah. So yeah, I think that. So now, there's a risk of this candle being green here, of this thing exploding higher again next week. And if you go back to the UV or the just TVIX, let's have a look.
Okay.
Okay, it's kind of a different picture, but we're kind of coming back. We come down to try and fill some gaps and things, but there's a distinct possibility that this thing could have another shot at going up towards 1,000 or higher. And what's worrying about this is we've kind of reloaded the gun on this, but because of the depth of correction. So what would be a real bottom? Okay, I mentioned this like 3 or 4 weeks ago. The first really big down sell-off was unprecedented. I think we got to minus 3,400 on the GINTs, on the New York Stock Exchange advanced decline line. That's never happened before. Possibly in 29 it might have happened, but it never happened in recent history. I'm not even sure it happened in 87. So
did we ever figure out how to get the advanced decline line on this charting platform?
No, but the
here we do. Oh no, that's not gonna.
Joe Granville, God rest his soul, used to say that whenever this, if the advanced decline line makes a new low, it is impossible for the market to bottom until it goes lower on a higher number. In other words, that's happened. It's actually happened multiple times during this bottoming process. So it's not in. I'd say it's unlikely that number is going to be taken out in the future. It could happen one more time, possibly, which would create another bottom. What's interesting is if the market makes a new low, and the VIXs don't go above this week's highs, that is actually a buy signal. That's a real buy signal, because in other words, the market goes lower, but the fear index is not as high as the extreme. Then you can buy the market with some confidence. And I think that if we do go lower and we make, whether we go down to that 1900, 1950 or whatever it's going to be on the S&P, and maybe 16,000 on the Dow, somewhere like that, possibly 15,000 previous high, somewhere in there, right after that, I think you're going to see a very, very substantial rally. And maybe that will be when the thing is over. Now, there is a chance, given the intervention and everything else, that the lows are in and we're kind of basing out. And, if we did have a strong update, perhaps early next week, it might be enough to signal that the bottom's already in. So you can't rule that out. And actually, I think if we were to get above yesterday's highs, and that would be a big development. So unfortunately for now, the technicals don't look very good for the next week or two. And if we come in on Monday morning and there's like 300,000 or 400,000 cases or 500,000 or something like that, obviously that's going to spook people. But we don't know whether people are getting used to it or whether they're going to panic over it or what's going to happen. So, but remember, the Fed is kind of behind the market now in a way possibly unprecedented, and you don't know what kind of firepower they might be able to unleash if they get really serious about intervention. So, well, listen, I got to take this. Listen, have a great
John.
weekend.
All right,
Stay
you
safe.
do the same.
Bye-bye.
Okay, bye-bye. All right, guys. Concierge Trade Alerts. If you didn't grab a screenshot, you want a screenshot, grab a screenshot. Okay. Concierge Trade Alert last night. Every CFRN member got the same info. They got the memo, as it said. Long 23.95. Okay. Now on the Concierge Trade Alerts, Logic has typically Logic has multiple targets. It's got the initial target, and it's got the trade 2 target. And of late, we've had, target 1, target 2, target 3, as I just showed you on the last alert that went out. We'll go over that in a minute. But on the Concierge, which is the static report that comes out shortly after the Globex Open each evening, those numbers are good for the entire session. We know that important prices, important areas are almost always tested. And the target for the Concierge Trade Alert, if it's a long trade, the weekly trading zone overhead is the trade 2 target. On a short alert, and the short alert's 23.22 for the S&P. We haven't been there. Okay. If that triggers, then the trade 2 target is 22.69. Now, this area up here from 23.95, not to the swing high, but just to the trade 2 target at 71. That was a $3,800 per contract move from the entry to the target. Okay, now just a bit ago we were talking about Michael and I, our approach to the markets, and what we teach is not looking for more points. I mean, nobody's going to refuse more points. More points are always nice, but solving the market equation, we believe, is done. Well, let's just face it. I mean, is it simpler to get 2 points or 20 points? Well, obviously it's simpler to get 2 instead of 20. But I need the money that 20 contracts brings. Okay. Well, you don't have to increase the number of points. You can increase the number of contracts as you earn the right, one step at a time. Now, the first contract, that money's got to come from somewhere, savings, under your mattress, wherever that comes from. But moving forward, after you've earned the right to go live by being consistently profitable 10 days in a row, reaching your goal in 10 trades or less, when you get that green light to go live with one contract, okay, that money's got to come from somewhere. But every contract you add after that, if you follow the blueprint, will be added with profit you earned in the market. And guess what? You'll never add a second contract if you don't have profit. Now, of course, you can do anything you want, anytime you want, because it's your business and it's discretionary trading. But based on the blueprint and based upon what we teach, you'll be stuck at one contract forever. In fact, what will happen, the blueprint teaches that if you have 2 consecutive days in a row where you do not reach your goal in 10 trades or less, you come out of live, you go back into SIM, and that's not a walk of shame, okay? It's a smart business decision because you want your business to succeed. So you go back to SIM, you book a mentoring session with me, with Michael, with both of us, whatever. We go through those trades that you took that resulted in you having 2 days back-to-back where you didn't reach your goal in 10 trades or less. We dissect them. We figure out maybe there's something about the definable edge that you don't quite understand. maybe market conditions were not conducive to the trades that you placed. We try to get to the bottom of it, okay? And once we get to the bottom of it and you understand what happened, then spend a day or two in sim regaining your confidence, making sure you got the kinks worked out, and then you step right back out where you were. If you were at 5 contracts when this happened, well, you don't have to go back and start with 1 again. You step back out right where you left off. Once you understand what happened, and once you understand how to handle that going forward, your confidence, your quiet knowledge that you can sit down in front of your computer on any given trading day and you can put on and take off trades, as many as necessary. It takes as long as it takes to reach your goal for the day. Traders who have gone through that process, and trust me, it's worth waiting for. Traders who first learned how markets work, then they learned how to read a chart, then they learned a legitimate definable edge, they practiced it in sim, earned the right to go live, earned $2,000 so they could add a second contract. Okay. One step at a time. You got to earn the right to trade 2, then 3, then 4, then 5. Traders who've earned the right to trade 10 contracts. And again, having money in an account somewhere that will support trading 10 contracts doesn't mean you earned the right. Some people might think, oh, well, I had this very successful business. I earned a ton of money. And so I've earned the right to trade 10 contracts because I have that much money. No. That's not what we mean. No. These dollars that you're using to add another contract, based on the blueprint, what it teaches and what we teach is that you earned that money in the markets, putting on and taking off trades. You don't touch that money you earned in your other business. Now, again, you got to put up the money for that first contract. But going forward, if you follow our methodology, our strategy, the blueprint, you'll only be adding contracts with profit you earned in the market. So I said all that to say this. This alert triggered last night, midnight Eastern. Okay. It reached the target about 4 a.m. this morning. So in 4 hours, traders who've earned the right to trade 10 contracts, this is a $38,000 move. Many people in America don't make $38,000 in a year. That's a true story. Okay. Now this isn't. I'm not saying this to tempt you to trade 10 contracts. What I'm saying this to show you why it's so important to have the patience, to not get ahead of yourself, to not put the cart before the horse, to do the deal so that you become a 10 contract trader legitimately. From the entry to the target. It's right there. Every one of our traders had the same opportunity. Okay? The first move ran up to 2408. So from 2395 to 2408, 95. It's at 13 points. $550, or no, $650 per contract traded off the top of my head. And then price gets back below the trigger. Important prices, important areas, almost always tested. Okay. And then off it goes. Now, if you're in the workshop last night, and if you were trading this move in this early morning. This area that's highlighted by this rectangle, what that is, that's where the market has found resistance all week. So if you exited that trade early, because when this candle opened right here, right there, you see that wick that's below it, right there? That was a red candle. Okay, you had a green candle, this candle opened, and it went red and started to decline. If you pulled up stakes and said, yep, I'm going to take my money and go, good for you. Okay? Because, again, the last time price visited, not the last time, but earlier in the week, this was on the 18th, price visited this area, got knocked down, tried again, knocked down, tried again, knocked way down to where support. And what does support do? When price can't go any lower, support sends price in search of resistance. And when price can't go any higher, it turns around and goes in search of support. To resistance, to support, you get the idea. So it would be a reasonable expectation when this candle started, when this candle was red before it moved back up and turned green, exiting here would have been very prudent. Okay. If you stuck it out, well, apparently you learned a thing or two about trading. Okay. Now, was there an exit signal? Let's take a look. On this move here, the trigger again was 23.95. The exit signal appeared right there. The official exit price. Now, yes, we had a target, but that's before we even get into the trade. Once we're into the trade, on an extended move, we want to look to the chart for an exit, because the chart will tell you when it's best to get out of this trade. Okay, this little black step line. Okay, it was hugging blue and climbing all the way up, all the way up. It crossed over, and actually this would be the first candle that closed below the step line after it crossed over. And that price is 24.73, 1 point above the weekly trading zone that was sent to our partners Monday morning at 6:15 a.m. Eastern. All the pieces come together right now. Okay? If there are any questions about any of this, okay? I don't know how to lay it out. That's my best way of laying it out. So if that leaves you with a question of any kind, please put it in the chat box. Whether you're a partner or not a partner, if you've got a question about anything we talk about on the show, please post it. Okay, that's how you learn. Now, this is a 5-minute version. Or this is a 5-minute chart. Go back. I want to do that. I want to move that. Okay. So at the beginning of the show, showed that price had fulfilled this alert and a window of opportunity. Okay. If you're not a member, that might not totally compute. But if you're a partner, if you're a member, and it doesn't compute, you really need to ask a question, okay? Because it's everything we covered in the workshop last night. Price went from the top of the window, 23.69, to the target, 23.65, and then some, right? It made it down to 23.55. And then price went back to the top of the window, which we were discussing just right as we came into the show. Let me check something. There we go. Okay. So as we were coming into the show, right, price had come up. It filled the window, came back up, important prices, important areas, you know the drill. Then did it again. Right there. Okay. And I put this, you saw me put this on the chart. It's done it 2 times. Is it going to do it a 3rd time? Well, the 3rd time, this candle did not make it back to the top of the window. This candle made it to the top of the window. Then there really was no more trigger. You know, the entry, if you took the 3rd entry as 69, possibly this is the one you got stopped out on. Now, this dynamic's important. Over here, okay, the first time we encountered the window of opportunity, and the first opportunity you had to trade this alert, your supporting cast of characters, red and falling, okay? As you get over here, right, what are you dealing with? Blue and climbing. Blue and climbing always has to be looked at as potential support. Right now, price is at the BBC and blue and climbing all at the same time. Are we going to make a break to the upside? We're going to find out. Now, if we do, if we can take out this swing high, okay, where's resistance? Well, everybody can see that this is resistance. But those of you who are members, passport holders, etc., know that right there, that is a high probability spot for price to find resistance. 2408/09. Okay. If price does the opposite, we'll take out this low, we'll take out this low, okay? That will, in effect, fill that window again. But I really like, this little spot right here. Okay. And that's roughly, we'll call it 67 out of 64. Yeah, 3-point window. I'll take it all day long. Okay. All right. Let's see. On the Dow, the alert was to be long 199.70. There we go. 199.70. 199.70. Alexa, 20,800 minus 19,970.
20,800 minus
Oh,
19,000 is 1,800.
Alexa, 20,800 minus.
The answer to your calculation is
Alexa, stop.
20,800.
All right. You guys can see it's a lot of points. This is 1997. Let's just call it 2000. All right. or 20,000. So it's 800. It's 800 Dow points. At $5 a point, it's $4,000 per contract traded. Once you've earned the right to trade 10 contracts, that could be your $40,000 move. Now, markets are not always going to be this huge. I think we have a new normal coming. I don't know what that will be. Prior to President Trump taking office, the average daily range in the S&P 500 E-mini is about 20 points. We now are currently experiencing something far different. On the S&P right now, looking back over the last 100 30-minute candles, if you average them, the average true range of a 30-minute candle right now is 38 points. That's almost, one 30-minute candle has almost double the daily range under previously normal conditions. Okay. Based on the 30-minute. Now, you know that we referenced the 5-minute. The 30-minute is really my go-to chart. It's the one that, for me, I get the most reliable, actionable information. So does it look like the 30-minute wants to do the dance again? It does. Now on the 30-minute, a lot happens inside a 30-minute candle. So one trigger, two trigger, you can't see that all of that is inside of this 30-minute candle. But you have your own charts, and so you can go and you can check that out for yourself. But hopefully you see. Okay? All right, let's go. If there's no questions, we'll just rip through this real quick. On the Russell, consider being long 1042. All right. So here's 1042. And we ran up to 1093. So call it 50 points. At $50 a point, $2,500 per contract traded. Okay. All right. Now, is there a weekly trading zone in this area? Funny you should ask. 1097/98. Zones are an area. We do get accustomed to price just sometimes turning on a dime right at the weekly zone, one of the weekly zones. And sometimes this happens. So if you're in a long trade and this 1097 is your trade to target, the closer you get to the zone, the higher the probability that you're going to make it to the zone. But the caveat is that zones are an area, and so this can happen. Okay? Just as we can spike it, we can come just a little bit short. Now, the zone below is 1002/003. Okay, now all of our traders had this information to work with. Monday morning, 6:15 a.m. Eastern. We've published the zone since December 14th of 2009. So we entered the area, we got a leg, we got a retracement. Price always reverts to the mean. Did it pull back to the BBC? It did. The initial pullback, we had a lag and a retracement right here. So without an alert, the plan of the day here is you want to be long this move until price gets below, because what you got here, you got an exit signal, so you don't want to be long. Price pulls back to the BBC, it overshoots it, touches the zone, heads north. Price is always trying to get to a weekly trading zone, either the zone overhead or the zone below. The more time you spend with us and with our strategy, the more adept you'll become at discerning which zone price is currently trying to get to. It's really quite simple. If price is above the BBC, that bull-bear cross, price is trying to get to the zone overhead. If it's below, it's trying to get to the zone below. When price pulls back to the BBC the way it has right now, we want to wait, be patient, and allow the market to show its hand. Okay? It will attempt to take out these highs and get to this zone. Of course, we need price to close above the BBC before we start thinking about long trades. And if price is unable to get above the BBC, in other words, if it holds, then price will try to get to the zone below. And if price decides it wants to go to the zone below, in order to get from here to here, it's got to pass through here. And if the decision is heading to the zone overhead, right, to get from here to here, price has got to pass through here. Okay. NQ. Last night's alert, 7305. Let's see, and the alerts came out at 7:25 p.m. Eastern. So that'll be 1925. So let's go find that candle. You're looking for the 1900 candle. That'd be right there. So it was during the life of this candle that the alerts came out. In fact, I'll move this out of the way for a second so you can see it clearly. Okay. Price came out, the alert came out in the last 5 minutes of this candle. And it said to consider being long. 7305. 7305. Okay. Yeah, let me get the idea. 7305. The first move took us to 7343. It's like a 40-point move in the NQ. That's $800 per contract traded. Price gets back below the trigger, does it again, back below the trigger, does it again. These little swing highs here, good for about 15 points, $20 a point. It's one of those wicks, about $300 per contract traded. And then price gets below the trigger. And from 73.05, puts in a swing high at 73.70. That's 65. It's $1,200 plus per contract trade. And it gets back below the trigger, makes the big move. Okay. 73.05 up to 76.31. Alexa, 76.31 minus 73.05.
7,631 minus 7,305 equals 326.
Alexa, 326 times 20.
326 times 20 is 6,520.
$6,520 per contract move. Now, obviously that means you got out at the exact swing high, which we know is unreasonable because we never know that a swing high or a swing low is such until when? Until after the fact. So not much you can do about it. So we had 1, 2, 3, 4, 5, 6 triggers off the same alert. With each ensuing trigger, the risk tends to be less, right? On the first trigger, we're talking about a stop way down here. By the time we get to this last trigger, and the previous swing low is just right there. Less risk, greater profit potential, the more times the alert triggers. And the fact that this triggered 6 times, is that unusual? Well, 6 is a bit of a high number, but 2, 3, 4, I mean, that's just another day in the office. It's just what happens. Important prices, important areas are almost always tested. Hard to believe, but a mathematical fact. For the trader who's earned the right to trade 10 contracts, this is a $65,000 move. How many stocks do you have in your portfolio that you've been hanging on to for years that have given you $65,000 in profit? Rhetorical question, but something worth thinking about. These opportunities are real. They're happening every day. The markets will calm down. There may be a new normal, okay, whatever that is. Well, we've seen the worst of times, we've seen the best of times. And we sleep well at night because our definable edge holds up, performs identically in a fast market, quiet market, slow market, market on steroids, because it's based upon the fundamental principle of how markets work. There's nothing to break, nothing to go wrong. This simplistic manner in which we trade the markets and teach the markets puts many experienced traders into an extreme state of denial. It's not true, it's not possible. Well, I mean, it's right here. You can see, people can stay in denial for a very, very long time. So why would an experienced trader deny the simplicity of this? I'm going to tell you why. Because they've invested lots of time, in many cases, many years, lots of money buying indicators and oscillators, and blowing up accounts and refueling the account and buying more indicators and more oscillators and blowing up the account, refueling, lots of time, lots of treasure. And so to show that experienced trader who's invested all of that into getting to wherever they are right now, to break it down to the lowest common denominator and show the simplicity with which one can use to trade the market, that just doesn't compute. I don't want to hear about it. I got indicators on my chart that I paid $25,000 for. Okay. That doesn't change the fact that what we do, how we view the markets, as elementary and as basic as it is, there's no algorithm out there that will give you any better results. Might give you the same results, but on a consistent basis, it's not going to outperform. It's just people, the guy that spent all that time and all that money, they just don't want to hear that. No, you don't understand. I spent X number of weeks at some place and I studied under this guy and I've got these indicators and I've got these oscillators and when I'm done running the numbers here, by the time you're done running the numbers, we're done for the day. That's not to brag, that's not to boast. It's to help you just see truth. You need somebody to teach you how to trade. You can have somebody teach you a very complicated, convoluted, and expensive way of trading. Or you can take a more lighthearted approach. And have these kinds of results. I mean, we're blessed people living in a blessed land. This NQ trade that we're talking about right now, nobody had to hunt or peck or run any kind of algorithm to participate in this. I mean, it was hand delivered, right? What you have to do is you have to, of course, be available. You have to be at your platform. You have to understand the risk-reward kind of thing, You should, of course, never make any kind of investment or trading decision until you consult with a licensed investment professional. Now, from a legal standpoint, we always tell you that. But from a moral standpoint, please make sure you know what you're doing before you start throwing real money at the market. Can't stress that enough. Okay? Yes, what we do is simple. Yes, what we do is inexpensive compared to other people. But it's no guarantee of your success as a trader. Your ability to understand it, your ability to implement it, your ability to separate yourself from your emotions and all that noise that goes on in your head when you put on a trade or even think about putting on a trade, that's all gotta be worked through. The less negative baggage that you have, the better. This simplicity is easier to get your arms around if you haven't spent years and tens or hundreds of thousands of dollars trying to figure out some way to trade the market. I mean, it's almost insulting, and I don't mean to insult anybody. Hey, I've paid my dues, man. I've been at this all these years, and it took me a long time to put together this, these indicators and oscillators and all this stuff, and And boy, when I run the numbers, and we mean business too. Okay? There's a hard way, there's a simple way. There is no easy way. Period. And you get to choose. God bless America. You can choose hard or simple. Okay? If you're new to what we do, I want you to know that what's happening right now has not affected our definable edge or the way we approach the markets in any way. If you go to youtube.com/CFRN, go back a month, go back 6 months, go back a year, go back 2 years. Watch a daily show where I'm doing the recap just like I did today. You'll see the exact same thing. When I say that we're blessed people living in a blessed, God really has blessed us. The fact that He has given us as a group of believers, the clarity to see the markets in the way that we see them. To whom much is given, much is required. So, as a community, we have to be ready to do whatever He requires of us, because we have been given a special gift. As a group, as a community, as a group of believers. Okay? Now, before somebody trips off the deep end, no, God doesn't tell us when to buy and sell. Nothing like that at all, not even remotely close. That's just not how He works. And when you get yourself into a situation and you're on your knees crying out, "Oh God, get me back to break even. I'll never do this again." Well, number one, that's probably not true. But number two, God cannot intervene and move the markets on your behalf. Because in doing so, how many other faithful believers might He be given the shaft to help you? 2 traders walk out of a bar, go back to the office, sit down. They both like to trade the S&P 500, but they analyze the markets a little bit differently. So one looks at his charts and it's obvious he should go long, so he does. The other trader looks at his charts and to him it's quite obvious that he needs to go short, and he does. Now, they're both sitting there praying over their position. Oh God, help me. Who is God supposed to show favor to? They're both believers. They both love Him very much. Maybe He bases it on the one that spends the most time in prayer. Maybe He bases it on the one that pays a higher percentage in tithes and offerings off of their profits. Well, I think He can see that neither one of those makes sense. That's just not how God works. Sorry about that, I had to plug in my fan. So, if, we believe in prayer and hope, but those are not good trading strategies. Bob says, maybe mention overnight margin cost. Bob, what would you like me to mention? I'll be happy to. So, if you can't pray your way into trading success, then is God just out of the picture? Not at all. What you can pray and how he does work is you can pray that by the power of the Holy Spirit that he would give you clarity of mind to understand how markets work, that he help you to see what the charts are showing you so that you can make proper decisions. So, can faith help you learn how to trade? Yes. But all the faith in the world is not going to move the market to favor you over anyone else. Okay, so Bob was just saying that I should probably mention the increase in margins that has taken place, and I'll be happy to. Futures margins increased due to coronavirus. Did I say that right? Futures margins increased. Let's see if we got anything under news. That's an article from 2005. Let's try this. All right, let's just see it. No, that's March 12th. Oh, that's still. Let's look for something more current. Does this even talk about margins? Okay, let's reword our request. Let's go to the CME. They probably got something on their site. CME.com. CME Group. In case you don't know, the trading floor is closed as a precaution. Of course, markets are still trading. Let's see what they got to say about margins. So they give me trading hours. This doesn't even look like the CME page, but I guess it is. At CME, how is it possible that for margins, markets, there's got to be something here about margins. I wanted to see it all on one page, but let's see it. That's just crazy. All right, let's try CME margins. Understanding, that's July of last year. All right, let me try one more. Exchanges increase trading margins. SEBI. I'm not familiar with SEBI. I wonder where these guys are with their issue. We'll track this down. They're giving away service to try to get out of trouble. That's probably pretty smart. And they pumped out a bunch of news to bury the problem, which we talked about on the street the other day on the show. Okay. All right. So nobody wants to show us their margins, so we'll just go to Daniel's Trading. They got a margin page. I don't know if they've updated it or not. See it right there, right at the top. Gain has been bought by FC Stone. For those that don't know, there's a press release out. Indices. Indices. Emini S&P. They're still showing. Here we go. Emini S&P. Initial margin is 13,200. That's double what it typically is. Apparently they're still letting you fly at 500 intraday. To trade crude right now, that seems to be normal, I believe. Financials. 30-day T-bills. 71, 35. Was there a market in particular, Bob, that you wanted to look at? Oh, Bob just sent me an article. Yeah, unfortunately, Bob. Oh wait, yeah, I can capture that. Okay, hang on. Temporary margin increase. Day session to 25%, and overnight session to 100%. This was published yesterday. Due to extreme market conditions, while taking into consideration our customers' need to hedge their stock portfolio, we will make the following margins available during the U.S. day session. These will be in effect on all trading platforms during the U.S. day session, 8:30 a.m. to 4. We will maintain as long as market conditions allow. If any changes, we will update this post and send an email. Okay. So the micro Dow, $300 during the day session. The full size Dow is $3,000. The micro ES, 265. The full blown ES, which they call the EP. 2650. Look at the DAX. 37,000. Day session. Day sessions are at 25%. Overnight session time, 5 p.m. Chicago to 8:30 a.m. Central. During the overnight session, we will continue to require a 100% exchange maintenance margin. And this was on the 17th, so this is the most recent here. And I'll put this, thank you very much for that link, Bob. I'll put it in the chat box for anybody. Send to all. Let me put it in the other little chat box, so it'll be a hyperlink. There we go. So everybody's got the link that you want to go to this page and check it out. Okie doke. So, all right, so we said price did the deal over here, was it 6 times? Now if we draw our line like that, we can see that it did it 7 times, and then it did it 8 times, even attempted a 9th one. Yeah, the 9th one even took it up to 73.24. So that's about $400 per contract in that little wick. And then another attempt, and here we sit below the trigger. Crude oil. Crude oil has been pretty comfortable between these two zones. Bearish cross, price gets below the BBC. When that happens, what do we expect? We expect price to try to get to the zone below. It did. When we approach the zone from above, we expect it to be good support, and it was. When the market finds support, it's going to send price up to find resistance. When we approach the BBC from below, we expect it to be good resistance, and it was. And it sent us back down, or it's sending us back down to support. Okay, we get about another 30-minute candle here. Okay, if we don't trade any lower, if we kind of just go sideways, this will turn up, turn blue. That represents support. So for crude right now, we've got resistance overhead, support right below. Price will ping back and forth between the two until either we take out this swing high or this swing low. Last night's alert for crude. Last night's alert for crude was to consider being short 24.85. 24.85. Down. Right there, 24.85. Down to the zone at 35. That's a $500 per contract move. From the published entry to the published target, $500 per contract move. Back above the trigger, does it again. Back above the trigger. This time it didn't drop all the way to the zone. It dropped to a low of 24.53. Okay. On the long side for crude, 26.65. And that happened right there. $26.65. Okay. The alert came out. The alert actually came out during this candle right here. So on this first move, price walked right up to the trigger and backed off. What was the swing high? Swing high was 26.63. The trigger was 26.65. So we came within 2 pennies of triggering, backed off, took another run at it, and we got through from 23.65 up to 27.34. That's $600 per contract traded. And then we got back below the trigger, triggered again, and from 26.65 to 27.65. That's $1,000 per contract traded. We almost did $2,000 per contract traded. Came a little bit shy of that. So there you have it. That's the deal. If you're struggling, if you're lost, if you've spent years and tens of thousands or hundreds of thousands of dollars trying to figure out some way to, trade the markets, and you're still not consistently profitable, don't be embarrassed, don't be ashamed. There's no shame. You've tried your best, you've done your best. You did what the world told you were supposed to do. So at this point, we all know that if we go down the same path, we're going to always end up in the same place. So you're going to have to do something different. And I always hesitate just a bit when I say that, because doing something different doesn't mean that you change what you do every time you step up to the plate. You don't try something for a couple of days, see if it's going to work, and then, try something else, and then try something else. No. Find something that you have good reason to believe really does represent a definable edge. And if the years of archives of the recaps isn't enough to show you that there's a definable edge, then probably we won't be able to help you, okay? But if you can look at those recaps that span the years and you can see that, wow, there really is a definable edge here. It doesn't have to be our definable edge, but just you got to find a definable edge that's reliable, okay? Doesn't have to be complicated. Doesn't have to be expensive. But you've got to make a decision. If you continue to do, well, let me say it this way. Whatever brought you here will not get you there. Something has to change. Well, I've been at this 8 years. I don't need somebody to teach me how markets work. I know how markets work. Then why are we having this conversation? Yeah, I know. It's frustrating, it's aggravating. But it's the truth about markets. If you haven't taken the trial, you can. Won't cost you a thing. Go to eminitrainingschool.com. We'll treat you just like a partner for 1 week. Live room, indicators, platform, one-on-one mentoring, Concierge Trade Alerts, Logic 247 alerts. We just swing wide the gate for a full week, no credit card required, so that you can really see, not only see what we do, but you can do what we do for a week, no credit card required. Then you get to make an intelligent, well-informed decision whether or not you want different results from the results that you've been getting. While you're on the trial, make sure that you avail yourself to the discussion group. If you're already a partner, there's a lot of information that gets published in the alert trial discussion group that I don't copy and paste over into the members group, but you have access to it. So, I encourage you to come hang out with us. Everybody on the trial has access to this. This morning, I pointed out the 2 opportunities in the ES. Okay, price would either go back from here. Price will either go back to the BBC, or it will go down to challenge these lows. The highest probability move is that it will go down to challenge these lows, and it did. We already covered that. But in the discussion group, you'll find, and lots of the partners are contributing, they're sharing charts. And when I'm not around, a lot of them are just as qualified to answer your questions because they've shown up, paid attention, understand and are actually putting it to work. Okay? Great group of people. You won't hear any trash talk. Nobody is going to say things that will offend you. It's a great group of ladies and gentlemen, and I'm just honored to be a part of it. I really am. Here's one last night where we ran the window, then went back to the top of the window, and we do it again. The market repeats itself. The market loves to repeat itself. The market does repeat itself. See all this stuff here? This is all an opportunity for you to learn. Okay? Chart after chart, setup after setup. We also have a channel called CFRN Breeze. That's where we go to hang out and just chat. Oh, that reminds me, this guy will be on Dr. Oz today. In the Phoenix area, Dr. Oz comes on at 1 p.m. Eastern. Dr. Oz having a special show today about the coronavirus pandemic. And bless God, our family member here, partner, Rich, and his wife, they got the virus, they were in the hospital, they're home recovering, they're doing well. That's an answer to prayer. Amen. But conversations about the things of God, things that are in the news, whenever you just want to shoot the breeze, we got a spot for that. Okay? Telegram, the application that we use to run this business 24/7, it's free. Just go to telegram.org, put it on your phone, put it on your tablet, put it on your desktop, and you'll be connected around the clock. Okay? All right. Good word for the day. Yesterday we talked about perfect peace. Today we'll talk about the power in God's Word. 2 Timothy 3:16. All Scripture is God-breathed and is useful for teaching, rebuking, correcting, and training in righteousness, so that the servant of God may be thoroughly equipped. The power doesn't lie in the writer's thoughts or comments, but in the written Word of God. Paul tells us all Scripture is God-breathed. It's impregnated with divine seeds of life. And those seeds will spring to life within you, producing the fruit of the Spirit, delivering on the promises of God. Whenever you sit down to have your daily time with God, your devotional, whatever you call it, view it as a gateway rather than a goal. See it as the book that whets your appetite for a deeper personal relationship with God. The psalmist writes in Psalm 1:1, "Oh, the joys of those who do not follow the advice of the wicked, or stand around with sinners, or join in with mockers. But they delight in the law of the Lord, meditating on it day and night. They are like trees planted along the riverbank, bearing fruit each season. Their leaves never wither, and they prosper in all they do." That sounds good, right? They prosper in all they do. And remember, prosperity has so much more to do with than just money. Can money be a part of prosperity? Yes. I'm talking about the prosperity of your soul, of your life, the whole enchilada. As you renew your mind with Scripture, your faith will grow, your outlook will be altered, and every area of your life will start to change for the better. All Scripture is God-breathed and is useful for teaching, rebuking, correcting, and training in righteousness, so that the servant of God, you and I, may be thoroughly equipped for every good work. And that's our good word for the day and the week. Now, we typically say at this point on a Friday, it's the weekends, spend some quality time with your family. I'll see you in church on Sunday. But a lot of churches are going to be closed this Sunday. And if you've been sheltering in place, you've already spent a week now, a week of, I hope, quality time with your family. And looks like we're going to be hanging for a few more weeks until this virus situation changes. For all the great minds that are working with this malaria medicine, the chloroquine, I feel in my spirit that that's a solution. I may be jumping the gun. I may be putting the cart in front of the horse, and that's always awkward. And so I don't want to do that. I don't want to create false hope, false expectation. But the results so far seem to be very promising. And I guess the world, the media, they're being cautiously optimistic and not, over promoting it. And I think that's probably in everyone's best interest. But one thing we know, God's got it all under control. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.